Hello traders, this is EagleStar, and here I'm going to show you charting practice from December to January 2010 to as far as we can go in 20 to 30 minute time frame. So we're going to be looking similar to what we did before at the highs and lows of the swings of the market. So as you remember, we have A, B, and C points for every fork that we draw, and we kind of look to see at these price extremes where price turns, okay, and how price turns. So not all of them are going to be perfect, but we try to find which ones are perfect, right? So this one gave us a little poke above, but we used the left, and it gave us the drop here entry. Right there, you see. And we have the sliding parallel tool. I'm just going to color the sliding parallel white for this. So we're going to be going through examples like this, and I'm going to try to highlight with my pointer where areas are. So you have ABC, poked a little bit above, it's okay. Sometimes it spikes a little bit higher and the fork still works, but we usually try to use the most extremes. Gave a sliding parallel. If you didn't enter here, you had a chance here, here to the drop. So actually maybe like this. Right, so we use this second small pivot to form the sliding parallel line, which it often does. There's no set rule on how to do it, but oftentimes I find this. Then it comes up, hits, drops again, comes back out. Where does it turn? Comes to another sliding parallel, hits, comes down, right? Like that. So comes up and out. So we have potential new ABC, right? I'll just draw the first two ABCs. I'm not going to draw them all. So, right? So next AC, A, B, C, comes out. Doesn't get exactly the action I wanted. So we can do this maybe. And it catches the bottom nicely on the warning line up to the top and drop. Okay, now new ABC. Potential ABC, ABC. And so a lot of times the ABCs, the B's will become the new A's, and the C's become the new B's. Right? So I'm actually going to change my fork to a different color as well. So this is just kind of a practice of the flow. What's the flow of the market? What are we doing here? Why are we doing this? So go line. Comes up, bam, comes up, bam, like the waves of the ocean, like I mentioned before, right? What does it come out of this? Is this a warning? Pretty darn close. Let's just say it's that. Looks like that, but you probably wouldn't have been able to see that while you're trading. I wouldn't have been able to. So, perhaps this is a warning line. Like that. Okay. Comes back down. Through. Stops. Comes back up. Hits the top warning line. Sorry, the median line. Comes down. Hits again. Down. Creates a new sliding parallel here. down, comes out. Now, new ABC, ABC, right? Delete that. New ABC. I'm going to change the color to gold, if you guys don't mind. So, ABC, right, swing up, gave you a nice entry, test and retest, long, okay? How much would this have been good for? Would have been good for 684 pips. Now, I don't know about you, but 684 pip, pretty nice. So, we're going to go a little bit over stops in this example, in this chart session. So, at first, when you first starting trading the Forex, you want to put your stop underneath the recent swing lows. So your stop would be under there, and your next, and then your take profit would be on the line, a little bit below the line, maybe a pip or two below the line. So as you risk, you're going to be moving your stops under the swings, under the swings, under the swings, under the swings, until you get to the top. Right? This, so, and then later you can look at using the ATR, the average true range, of 200 and 500. Sorry, 255. Right. And then so at this point on this chart, the average true range was for that was 67 or 52. So you'd want your stop to try to be at least 52. But usually 52 plus 1/3. Okay. Even though it was 20 to, actually let me see. Yeah, so 52 for that particular trade. Because you don't always use the same stop, but when you're first getting started, you don't need to use dynamic stops until you learn more how to use the forks. So let's just say you put your stop under the swing low, so you'd have 670 points, about there, right? Got out of that trade. You saw another sliding parallel bounce. You draw this in. Maybe you could see that, maybe not. If you did catch that, you might go for the next high, right? That's kind of called that trade. So I don't think you did that. But as the price out, let's see, came back into play. So let's see if we got almost, but not quite. So almost hit it to the pip. If you would have went long on the little formation, you would have, or you could have got long on the break and retest, another 640 pips, and then went long on this retest, another maybe 430 pips if you would have gotten out with a stop under here, profit stop. Let's say 324. So we have about 684 here, or 85, we'll just run off, 685 there, and then let's say you got this trade, another 670, so that's over 1300 pips, and then another 350, so 1650 pips between May 9th and November. So 1,650 pips on one pair on one chart, okay? And that's not considering 2 pairs, 3 pairs, 4 pairs, 5 pairs, 2 different time frames, anything like that. Okay, so 1,650 pips, which is pretty good. You almost captured everything there. So price falls out. Draw a new fork. Let's see which one works. A, B, C. Okay. May have gotten this. Drawing this in. On this pivot. May have gotten a retest of that. You see, if you're looking hard. Notice I'm only shorting. I would only be shorting on this down fork. For an up fork, I would only be going long. Okay. Test. You could say test and retest almost off of this resistance here. So if you went short there, if you pulled that off, you get out the median line, 908 pips. So this one would have given you about 350, maybe another 408 or so, 410. So that's about 900 pips between December 14th and January 7th. So, okay, price breaks out. Let's draw on a new fork. A, B, C. See which one works. A, B, C. Okay, C. Oh, very nice price action. Okay, so right here, zoom through, retest, go higher, right? Didn't get to the top, but you would have probably had a profit here. That's 317 pips. So A, B, C goes up, enter long here, and notice that wide range bar means people were buying there. It's also a sign. Okay, got out for 300 and what do we say? 350 or something like. Okay, price comes back down. Put your sliding parallel in. Okay, goes back to the top. So went long here. Would have gotten out at stop profit 370. Sliding parallel here, go long, got taking profit at the median line, upper median line, 400 pips. Go long again, if you notice this, if you were there watching the screen, you notice this, for another 350 pips. Okay, so we had how many pips here? We had 350, we had another 350, 700, we have another 400, and so that's 1100, and then again to the top of the line, we'll say that's 350. So that'd be 1450 pips, give or take a couple hundred. Wow. Now, as you guys can tell, that I'm kind of a joker sometimes. That's a lot of moolah, my friends. If you would have caught one of those, okay, and you're trading one standard lot, okay, that's $3,500, okay, and that's not bad over the 3 months. I took this fork from November of 2010 to April, May of 2011, okay. And again, okay, so we're not even done. Okay, I thought we were done, but we're not. Okay, so that comes down, busts down, right? Busts down, gives a test, retest. Say you went long there to the median line. So I think what we're at 1,450 plus another 450, so that's like 1,900. Wow. Okay. So then we see another median line. Okay, I don't know if anybody sees that, but I do. Okay, so we'll try this ABC on modified shift because it's a large downswing. We'll see if this works. Okay, there you go. Let's see what we got going on here. Well, we got one good trade maybe. We might have gotten stopped out the other ones. Alright, so say we go long here, sorry, short here. I would have to be a little bit above 50 pips. Maybe if we put in an ATR it would have worked out. Let's see here. 58. I think we would have gotten in exactly. So might have a little bit more space. So 58 plus a third. So we would have been had probably like a 75 pip stop. You make 475 pips. So that's about a 5 to 1. Okay. So price comes out, breaks out of that. Let's draw the fork ABC. Let's see if it catches that. A little bit, not that well. Maybe would have went long here and gotten out. Profit stop somewhere in there for 135. ABC. Let's draw a new ABC. Okay, so we have a new ABC pattern. See if we got any. Went down, came up, bam. It doesn't seem like we have any good action off this line set. Not anything that I think you guys would catch. Let me see if this C pivot works better. Sometimes you need an alternative C pivot. Looks like this would be a little difficult to trade. Unless it came through and you traded this short, then you would have gotten about 550. And price breaks up. Sometimes the chart won't show you a trade, and you have to accept it. Let's see what we can find here. ABC. Obviously, keep in mind I see past data, so I'm not. These are opt trades, but and people are going to ask me what did I just do right there. Why is my A pivot all weird? But I guess you could say this is a good example of an inverted median line. I think is the correct term. So how we build this? So we take that, capture the highs. Actually, for this one, you might be able to do that, and then this, and then that. Okay. So it's sort of like an action-reaction set, just inverted median line or reverse median line. Okay. You might have been able to catch this for 160, this for 1450, or if you traded it to the bottom, it would have been up to 92. Okay. Price continues down, and if it would have placed stops above the swings, you would have made a lot more, obviously, but we're not going to say that because we can't predict the future all the time. Another ABC. See what this shows. No. ABC. See what this shows. Yes, correct. Very correct. Okay, so here, what do we got? How many trades do we see here? There we go. Put a sliding parallel in. We have bounce, retest, take this 116, 115, 120, bounce out. Okay, maybe do one of these as above so below, but I don't think I would have been able to catch this. Up, breaks, tops, and starts to tell you that it's going to top. So at this point, right around here, I might have been drawing a new median line set to the downside. It should look like this. And if I had caught this somehow, which I do catch these sometimes, I would have made 350. Not all the time. It's sometimes. Okay. So price kind of not reaching the line. Maybe a sliding parallel if you went short and got stopped to break even, or a slight loss. You may have been able to go short here, but remember, as above so below. So almost made it, not quite. If it would have went to this one, it would have made it. So you would have made it there. So you might have been able to squeeze a trade in here, but I'm not sure. I would say almost doubtful. So delete that. Okay, A, B, C. Let's see, which one should I use? Start with the one to the left. And this one's a little bit higher. Drop down, say you went here, test, down, and retest. 420 pips. Gone out, maybe saw this turn here. And say, hey, I'm going to take it to the bottom off of this line. And I'll show you why I come up with this line. So test, 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 drop. Okay, goes all the way back here actually to that line. So you might even be able to draw it like that. So now if you see this in real time, not everybody sees it. So test, testing, fooling around, test, 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 drop, right? So some lines I don't see. This is just a what if scenario. So as above so below, stops. Rises out, comes back down. We'll say has another sliding parallel. That maybe no, not really perfect, but we'll draw a fork. See if that works better. A, B, C. A, B, C. It works pretty well. May have gone short here or here for about 200. You could also use this. It's a gap. It's called a gap median line. So you can play either side of this. Both of these are pivots, or that. So one of those three, whatever one fits best. Looks like this fit best. So here 160, here 180, here 150. Okay. Now if you would have seen this and went short on the retest of the median line, step above here, 180. Okay. Now these are kind of advanced stuff that I'm showing because I want you guys to begin to understand this. So, new median line, A, B, C. Let's see which one will catch price of this hole. That one does. So, long here, 180. Let's draw a width median line. So could even gone like this. They would have both given you the same trade. So width median line means you pull the full width of the range before it starts to swing up. Okay. So full width of this range here. Did everybody see it? That's a range. It breaks out of the box, retests the box from this high, and then go up. You see that? Okay, so could have gone long anywhere here. Long. 302, broke, zoom retest, 270. Now, if it's increasing in velocity like this, you could have also just aimed for the upper median line parallel. That's going to be 640. Okay, let's see what it does here. And then it starts to trickle down. So price usually runs out of energy at median line. Now, median line doesn't mean middle. Median line means any one of the three lines. Okay, so goes up, retest. Looks like this is a break over the weekend. Maybe you didn't want to do that, but you would have missed on this trade. So just a heads up. So take that off. New A, B, C. Let's see what it does. Draw from the far left first, and then the one to the right, because the far left is the original extreme point. If you understand what I'm saying, it's the origin. Left is the origin because it formed first, right? Okay. A, B, C. Swing down, put an entry on this line. Would have had 325 pips to the middle line. Not bad. Okay. Now, price flies out of this hole. I'm not sure if you would have been able to catch this unless you would have seen this. Okay. But it's okay if you didn't. So, but if you did, you would have been up a few pips. So, take that out. Let's see if you would have caught this with this line. Nope, but you may have had trade here. Would have gotten stop profit, maybe at 170. Maybe trade here off the sliding parallels. Not bad. Okay. Maybe trade here, 177, 175, trade here to the top of the same parallel, or aim for the upper median line, 380. If you gotten out there, you would have came back here, saw some of this action, gone long, 208. Maybe you would have caught this, drawn this in for 75. Not too shabby, right? Of course, price is going down, but I wouldn't trade against an upsloping fork. And I got this nicely, but I wouldn't do that myself. But people do that. People do that. Okay, so take these out. A, B, C. See what I can find. A, B, C. Almost. Let's see, I think this is the action reaction set. Draw a center line. Copy the extreme. Sometimes you have to tilt your head to see it. But I would have maybe you would have caught that. I don't see it exactly right now. But let's keep going. Okay, so I see it now. Okay, so perhaps you would have gotten this out of this flow. like so, and like so. This looks kind of hard to trade here, but okay, so price flows down, starts to come back up, they're on a new median line set. Now this particular chop here, I might not have been able to see it on a 4-hour chart, but maybe a 1-hour chart would have given me 100 trades. So just keep that in mind. So I saw this maybe going short here to the line. Maybe would have shorted that line to the line. So, but anyway, A, B, C point. So in this example, you might have been stopped out if you didn't have your stop underneath the C pivot. But if you did have your stop under here a bit, you'd be up 180 there, maybe another 220 there, another going down. Okay, so entry, exit. Maybe you would have gotten another entry here, exit off the slide below. Now I like to use sliding parallels a lot, not everybody does, so it's really up to you. Here A, B, C, and another trade. Test, retest, exit maybe, zoom, test, go long again, exit maybe. So either way that you would have made money here. Maybe just aim for the upper line and put your stop. So could have said, hey, go along here. My stop is going to be below the recent lows. Recent low. And then as price came up, put your stop under the swings, and then you would have caught as it moved up. You would have probably been stop profited maybe there if it didn't, because it didn't touch the top. So you would have had 472 pips and it came down. So just to keep this, and there's some slide, and there's another there, another sliding parallel there. So just to keep this short, I'm going to end it now. So that's a really powerful tool. It's that you can use. And this caught this, I think. So this is just a review of the euro and what you can do to catch some trades. And very powerful tool. I'm really happy to share it with you guys, and I recommend checking out more online resources, Tim Morge's website and articles. Thank you. And many trades, many profitable trades to you.